Thanks for signing up for a free 30-day trial to Portfolio Builder. As soon as you click the red button below this video to continue your free trial registration, you'll be sent your very own unique spreadsheet. Let me show you how fast it is to get started. Go to the month, enter your deposit, let's say $100,000 to start out with. Then choose your target settings. The default settings that we recommend in a defensive strategy, expecting a stock crash or at least bear market, is to have a 10% cash position, a 20% oil and gold position, and a 70% bond position. And if we scroll over, you can see this will alert exactly how many shares of each ETF to purchase to reach this goal. Now, after you do finish your free trial setup, there's a much more in-depth tutorial with a written guide on how to do all this. But as you can see, it's already told me simply I need to purchase 918 shares of the US Oil USO ETF, 82 shares of GLD, and 582 shares of the TLT. Now, if we scroll over here, this is where we can generate weekly income on the TLT. The income from the TLT is far less than something like the SPY ETF, which actually can write 3 paychecks a week. But until concerns of a recession or bear market are relieved, it's prudent to have a 20% oil and gold position and a 70% bond position. Now, if we do get a market crash, and it's clear that QE4 has begun, we may want to rotate into a growth strategy, which would sell our potential oil and gold position for a profit, get out of the bond position, and target a heavy growth portfolio. And these blue ETFs right here represent our high growth opportunity. The QQQ, the EEM, which hits China and its colonization, EWJ for Japan, VGK for all of Europe, and then ASEA for the coastal areas around Asia. And you can see this is now alerting to purchase a 24% total portfolio holding in the QQQ, a 24% holding in the emerging market ETF, EEM, and so forth. 5% in Japan, 11% in Europe, another 5% in the Asian region. Now, a third scenario might be one in which we don't get a stock market crash, US-China trade wars are relieved, and the Fed remains slightly dovish. If that's the case, then we can switch to the following settings where we say we want to generate a high level of income. We're not interested in growth right now, and we still want a small target cash position. And what this does is it puts nearly all of our capital to work in the SPY ETF. Now, the SPY ETF is by far the most lucrative way to generate retirement income because every Monday, Wednesday, and Friday they have a new option contract that is expiring. And this will allow us to write 3 paychecks a week on what many consider the world's second safest asset. So after US Treasuries, the most safe asset is the S&P 500. Now if we scroll down here in the purple area, this is where we keep track of buying and selling our stock shares, which will automatically funnel up here and tell you what to buy and sell. In this area, we write covered calls against our underlying ETFs if the circumstances make sense. Typically that will only be on the TLT and only on the SPY, as we're looking for growth on the underlying assets when we're investing in these other riskier, more volatile ETFs. As the positions close, we can move them over here to the closed option writing section. And from time to time, we will do some long options when volatility has collapsed. Not only may I go long on certain ETFs with call options, I may also buy out of the money put options expecting a significant pullback in equities. And so this section allows us to track the profit loss real time on all of our open long positions, as well as a place to sort them out and keep track of the profit loss once they're closed. Now, we're not doing any sort of spreads I don't believe that helps our return, and it definitely dramatically increases the sophistication. So our goal is to be able to generate consistent retirement income, protect your portfolio, and react to the market as best we can. And the main play is to follow the Fed. If they are doing quantitative tightening, we'll be in a defensive mode, holding the commodities and the bonds. If they're increasing the monetary supply, we might either be in an income strategy if the markets are overvalued, or in a growth strategy if markets are undervalued. So there's a lot more content, daily updates, weekly coaching calls to get you up to speed with our platform. I hope you really enjoy your free trial, and again, just click the 30-day free trial red button below this video to continue your registration.